Hello traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. So in today's video we're going to be talking about the bearish doji star candlestick pattern. This powerful reversal signal can be a game changer for your trading strategy. So we'll break down its structure, explain why it forms, and show you exactly how to spot it on your charts. By the end of this video, you understand how to use this pattern to potentially predict market tops and make more informed trading decisions. So whether you're a seasoned trader or just starting out, this information will be invaluable for your Forex journey. So without wasting much of your time, let's get started and unlock the secrets of the bearish doji star. So first, what is the bearish doji star candlestick pattern? So this pattern is a powerful reversal signal that forms during an uptrend. It consists of two key candles, a strong bullish candle and a long white body candle, followed by a doji candle that gaps above the previous candle's body. And this formation is crucial for identifying potential market tops. The candle could be white or could be green depending on your chart color settings. So as you can see, the first candle here, which is this one, is my arrow. This is the first candle, and that candle represents strong bullish momentum with buyers in full control. The second candle, which is this, is our doji candle, and it shows a sudden shift in market sentiment. This doji must have relatively short shadows or wicks and gap above the previous candle's body for the pattern to be valid. So there should be a gap right here, no matter how small, but there should be a gap right there. So now, why is this formation so significant? It reflects a critical change in market psychology. The initial long bullish candle demonstrates strong buyer control and optimism. However, the appearance of the doji signals indecision and a loss of upward momentum. So this is where bears begin to challenge the uptrend's continuation. So remember that the strength of this pattern lies in its specific formation requirement. It must occur in an established upward trend or upward reversal for continuation for a downtrend, and there must be a clear gap between the bodies of both candles. These elements combine to create a powerful signal that the current uptrend may be coming to an end. The confirmation needed for this candlestick pattern is the third candle, which is this red candle. It should be a bearish candle and closing below this or below 50% of this first candle. So that will be used for your confirmations. Okay, without wasting your time, let's hop on the charts and try to find this pattern. So you can see this pattern right here. This is the bearish doji star candlestick pattern on the charts, and we are on the daily time frame, which is advised because the daily time frame is a much higher time frame, and we'll spot less false signals or false patterns. So you can see this was a bearish trend, and this was just a pullback. This is a pullback. We are bearish originally. See price giving us lower lows, lower highs, lower lows, lower highs, a lower low here and a lower high. So we are looking for a continuation of the downtrend from this upward reversal or pullback. So we're looking to continue the trend. So right here we have the bearish doji star candlestick pattern. You have the first candle, which is the bullish candle, then the candle in the middle, which is the doji candle, the star, and we have our confirmation, which is this red candle right next to it. So that's a perfect example of the bearish doji star candlestick pattern. Remember, this is a reversal candlestick pattern. So let me look for another example for this. Okay, we have one here. You can see this one. So this one is used in a bearish trend, similar to the first example we just saw. So this was just a pullback before this continuation to the downside. Remember, we are breaking structure to the downside and confirming the bearish trend. So this was just a pullback, and at the end of the pullback we have this bearish doji star candlestick pattern. So first we have the bullish candle, which is the first characteristic. We should have a bullish candle, then a gap, and a doji candle which gaps above the first bullish candle, and then the next candle, a bearish candle, which is the confirmation. So that is another example of the bearish doji star. Okay, I think I have one more example here, but that should be on the 4-hour. So I'm just gonna, okay, let's look at one more example. So this is another example. So you can see this first candle, which is the bullish candle. We have this doji, and have the confirmation bearish candle closed. We have the gap also. So all characteristics are on point, and this is a valid bearish doji star candlestick pattern. And that is another example. Let's talk about how to trade the bearish doji star candlestick pattern. The key to success with this pattern lies in waiting for confirmation, which is the third candle or the several candles after it, before taking any action. So let's talk about entry points. After identifying the bearish doji star, you are looking for a bearish candle with a downward gap following the doji. So the third candle confirms the bearish reversal. So consider entering a short position when the price closes below the doji's low. So when the price closes below this doji, you should consider entering a bearish trade. Now remember, this is on the higher time frames. I won't advise using this on the lower time frames, except if you're using it for confirmations. Maybe you are in a support or resistance zone and you need to confirm if we are about to start selling or start buying from that place, from that area. Actually start selling, because this is a bearish doji star pattern. So you can use this for your confirmations, but we are on the daily time frame, and I'll just be looking to use this to predict the next day or the next couple of days, because this is the higher time frame and we are sure of less false signals. So the entry should be at the close below this doji, and once you see that close below the doji, you should consider entering bearish positions with your stop loss above the high of the doji. Your stop loss should be above the high of the doji, and this represents a point at which the bearish thesis would be invalidated, and your take profit should be 1:1 or a 1:2, a fixed risk to reward ratio. So this means if your stop loss is 20 pips away, you'd set your take profit at 40 pips. So just gonna adjust this. You could also target key support and resistance levels for your take profits. So this was a bearish trend, and we were able to just join in and trade it all the way down here. So that's one way to use this bearish doji star. If you need additional context, you can see this. We are in a bearish trend, and this was just a pullback. This is a resistance zone. Remember to always trade with additional context. Don't just trade these patterns alone. I like to use them as confirmations from support or resistance zones. In this case, we are using resistance zone because this is a bearish continuation pattern, and you can see using this as a confirmation from this zone, you can see price reacting off the zone with the doji, and the next confirmation candle closing below that doji, confirming that yes, we should be entering our sales from here. So that is how I like to use the the bearish doji star candlestick pattern. So let's go to the daily time frame and look at our other examples. So this is our first example, and let's just talk about it. So you can see the entry would be the close below the doji. So we're looking to enter here. Stop loss placements are above this, and I'll take profit at a fixed risk to reward ratio 1:2, or you could target support zones or support levels, significant support levels. So we are in a downtrend here, of course, and this was just used for continuation of this downtrend. So as how I would have been able to enter this trade. Maybe you could use your Fibonacci to check for potential reversal zones, and you can see that this area aligns perfectly with the 50% Fibonacci retracement level, and that signifies that we should be looking for sales from that area. And you can see the confirmation with the bearish doji star candlestick pattern here, giving us an opportunity to enter a short position from that 50% level. So that's how I would have entered. And let's look at this one. Let's look at this example, and you can see here we are just having a pure bearish trend, pullbacks, continuations, pullbacks. And if you draw your Fibonacci from here, you can see that we are in the 50%. This is another example where we are at the 50%, and we should be looking for a confirmation to continue the bearish trend. So you can see price giving us the bearish doji star candlestick formation here, which was used in this case as a confirmation for the bearish trend to continue. And we could enter at the close below the doji, which is this, and the stop loss above here, and you take profit at a 1:2 risk to reward ratio. So this is a trading strategy you could use with the bearish doji star candlestick pattern. So alright traders, you've come to the end of today's video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.